in a very precise manner, do you think Mr. Trump will succeed in doing what he plans out to do? If that is so, what will happen to US markets, and as a corollary, what will happen to Indian markets?
So, now what he's planning to do, and at least, their stated objectives, there could be other objectives, but his whole objective is I want manufacturing to come back to the US. Now, he's saying that I can make my manufacturing lower cost. So I'm going to increase the prices of all other products. And that's the way it will come back. Most of the time, history is that it doesn't work that way. Because, for somebody today, if he has to take a decision whether he wants to manufacture in the US, so he's to put up a factory, he has to think not 2 years and 3 years, but the next 20 years that, he should be able to make it and sell it in a cheaper way in the US and across the world. Now these tariffs are something which can get changed. And Trump has said that, other countries come to me and then they negotiate, I will change the tariffs. So then, how does somebody put up a factory today? Because if suddenly this tariff is changed, then that factory again becomes unviable. Second is factories take a long time to come. There's a change in regime. There's a change in, a party which rules and they go back to the old tariffs. Then the factory can't be made unviable. So I think, one issue is going to be that if you want manufacturing to come back to US, the tariffs may not bring those manufacturing back to US. Now, if there could be other objective, which is that I want others to cut down import duty on US goods, that he may succeed in doing to some extent. Because everybody will start weighing what helps them, what does not help them. Like I guess India started the negotiation a few weeks ago, and they said we'll move to a free trade. So, there'll be a lot of give and take in that negotiation. But obviously, like, India will cut down some tariffs also and give access to US products on some tariff. We'll probably end up buying oil from them. We may buy defense from them. So, to that extent, there'll be country by country negotiation, which he does. So, if he's thinking of this not as like really, I'll bring manufacturing back to US, but basically I'll be able to open up new markets for this. Maybe to some extent he'll succeed. But the last point is going to be, you succeed in the long term, but there's a short term pain. And whether the
Correct.
US consumer is willing to take that pain and who wills first.
Right.
Because at some point, the inflation pain may be more than what, the consumer is willing to tolerate, and approval ratings start to fall for any politician. They don't like it at that point of time.
So we have to survive this, and we have to somehow make money from this turbulence that is affecting our markets. You manage a rising star portfolio, a multi cap portfolio, all put together 1500 crores. What are you doing against this backdrop of tariffs, plus the backdrop that RBI has loosened liquidity in India, and later next week we have another meeting? What do you think will happen in that meeting, and how do we navigate this volatility?
So, if we like had not looked at the tariffs, there was some things, a lot of things were changing incrementally positive for India. Like market had come down, so valuations were, even if you don't call it cheap, they had gone to somewhere near fair value range. Liquidity was, like you said, improving a lot, and RBI has done a lot to improve liquidity. So finally, we have a surplus on liquidity. Rates came down like in February. Our view is that rates will come down again in April. Hopefully, next week they cut rates again. So, in that sense, things were going in the positive direction. Earnings were awful in the first half of this fiscal year. They picked up a bit, and I think the March quarter numbers will come now, which again will be like not great, but maybe a little bit better than what we saw in the first half of the year. So it was slowly, growth is picking up a bit, even if it's not galloping, it's picking up a bit. So our view was we'll get into a period where we make some money in the market. It may not be anything like we saw in the last few years, but we probably make positive return, and we make return which are maybe, more than debt instruments. Now, these tariffs have created obviously like a bit of question. For us, it is we always just step back and think, okay, so does earnings of this company change dramatically because of this tariff? So we had this one view which we have been playing for the last few years, which was buy local, avoid global. which was, focus on domestic sectors and try and avoid the global sectors. We were, in fact, over the last 1 year, we were saying, okay, that tilt which was very, very pronounced earlier, we were slightly, moderating the tilt because a lot of the domestic sectors had done well. Valuations had gone up, and some of the global sectors, the valuations had come down quite a bit. Again, probably that tilt remains to buy domestic plays rather than to buy global plays. Because the domestic plays, at least on a very fundamental basis, are not affected by these tariffs.
If you like the video, do like, comment, share, and subscribe.